This year has been one hell of a ride for Beyond Meat shareholders. Shares are up 40% in January after they announced a deal to make snacks and beverages with PepsiCo. Afterwards, shares fell twice after Beyond announced their Q4 2020 and Q1 2021 results. For both quarters, the company fell short on revenue and adjusted profit expectations. Beyond posted some impressive results last year. Revenue was up 141% for Q1 and 96% for Q2. As a result, Wall Street was very optimistic about the following quarters. Unfortunately, Beyond's food services suffered during the global pandemic. Many of their restaurant customers were forced to close or operate at limited capacity. If we look at Q1 of 2021, revenue was up 11%. Of that, retail sales were up 45%, but food services were down 35%. Another problem Beyond is facing is coming from its competitors. Impossible Foods is cutting its retail price for grocery stores by 20%. Beyond would be forced to make similar price cuts, hurting their margins. Another competitor, Tyson, is ready to launch its plant-based products. Tyson is already pricing its patties $1 less than Beyond. All in all, this will prolong the time it takes for Beyond to achieve sustainable profitability. So, during the months following January, Beyond received several downgrades from analysts. But it looks like things are turning around. A Bernstein analyst recently raised her price target for Beyond. Shares are up almost 20% for the week. Now let me go into my valuation for the company. I expect the food service industry to recover as the pandemic subsides and Beyond to continue to expand its international footprint. On April 12th, Beyond announced their plan for major retail expansion in Europe. Portions of the plan include Beyond entering 445 retail stores in the UK, 1,000 retail stores in Germany, 1,500 retail locations in Austria, and 1,000 retail stores in the Netherlands. These plans will maintain Beyond's impressive international retail growth of 189%. For these reasons, I gave the company a 45% revenue growth for years 1 to 5. This is in line with analyst estimates for the next 2 years. I don't believe that this growth is unachievable for Beyond. Beyond is already creating brand recognition through its partnerships with restaurant chains and is becoming synonymous for plant-based meat. If we look at some of the meat segments, we can see that a few companies control the majority of the market share. Tyson has a 33% market share in chicken and a 49% market share in beef. I believe that the plant-based meat market would develop in the same direction, where a few companies control the majority of the market share. According to a new market research report, the plant-based proteins market is expected to grow to $21.23 billion by 2027. With my estimates, Beyond will have a 20% market share. Also in April, Beyond opened an end-to-end manufacturing plant in China. This will allow Beyond Meat to bring the cost down for consumers in China by utilizing local supply chain and give them a stronghold to penetrate the Chinese market. Beyond also opened a new manufacturing plant in the Netherlands that will improve its cost structure in Europe, which will help make its sales in the region more profitable. For these reasons, I expect Beyond's margins to move towards the average margins for food processing companies, about 13% by year 5. Net operating losses will keep the effective tax rates low for the next 5 years, and then Beyond's effective tax rate will move towards the marginal tax rate by year 10. I expect Beyond to be less capital intensive than conventional food processing companies, so I gave them a sales to capital ratio of 3. So for every $1 they invest, they will earn $3 in sales. I calculated a cost to capital of 5.4%. Since food processing is a safe business, I expect Beyond to maintain that cost of capital in the future. With these inputs, I calculate Beyond to be $137.29 per share. At the current trading price of $129.60, the shares are 6% undervalued. Of course, this is my story and my fair value for the company. Your story for BYND could be different and would result in a higher or lower fair value than mine. Please share your story for the company in the comments section below. And as always, if you like my content, please like, share, and subscribe. Thank you, everyone.